Recession, recession, recession. It's all over the news. Everybody's talking about it. Is it even going to happen? That's what we'll get into first. But more importantly, why? The second thing is the next economic phase. And let me give you a little hint. This has to do with China. I've got so much important information to cover. Let's begin. If we want to look at an economic cycle, we talk about the recession, we got to understand why. This is what I'll start with first. Walmart CEO says shoppers are being more selective as they deal with inflation. You might be on this as well. Maybe your coworkers or friends or family, you've heard from them. They're not going towards the name brand as much. They're using the generic brand. They're buying less of this and they're trying to really cut out from that. And these little things do actually add up in the company's bottom line. But of course, it has an impact on how many jobs are created or lost. Because if there aren't as many buyers coming in the door, they're not buying as much, that has an impact all the way down the line. Suddenly, they don't need as many of that product, so they're not filling it on their shelves. They have way too much inventory. They're trying to clear that out. This all has an impact. Okay, it's very important. It's not just about shareholders, although that is one aspect. The American shopper is feeling stressed by inflation and the effects aren't being felt evenly across categories. Shoppers are being more selective, skipping some electronics, for example, in favor of staples. At the same time, you could see as inflation has picked up, the total spending could even be the same or maybe even more, but that's because stuff costs more. It's not that they're going out there and buying more stuff. Okay, that's what needs to be understood here. We'll look at our favorite, Jamie Dimon, and what he had to say, but that comes up in a moment here. Walmart is among a slew of retailers that has seen a shift in shopping patterns as inflation drives up the price of food, housing, and more. And we've seen all of these prices go up, but the point I wanted to make here was Walmart is one of those places where people go to look for discounts. Costco as well. You're buying in bulk, you're trying to save money. You're not going to the Whole Foods, you're going to the Walmarts. And this is happening right now today, and yet Walmart is feeling the pinch as well. World economy heads for one of its worst years in 3 decades. Bloomberg analysis anticipates recessions in Europe and the US. China seeing rebounding monetary policies on divergent paths. This divergent path that I've been noting over the last while has been very interesting because at the beginning of 2020, we saw the whole world go into this massive stimulus, yet China did the exact opposite. Exact opposite. How weird was that? That they went into a different mode. And I believe that they did this because they knew they would be high demand, that all of these other countries around the world are going to start ordering mass quantities of things and they're not going to even be able to deal with the demand. That's exactly what happened. And then come around the time in which stuff is too expensive right now with inflation, in a time in which you start to have increasing interest rates, China can go the reverse direction and actually grow during a period in which other economies are shrinking. Now, it might just be coincidence and you can figure it out for your own self, but I think it is interesting just to point that out right here and now. Jamie Dimon says inflation eroding consumer wealth may cause recession next year. Now, overall, of course, he was very bullish on everything and he made it seem like everything was a-okay, but he did mention that, and I do believe it's important to highlight where we see this happening. And of course, it's the consumers that we have to watch out for, because in the United States, 60+% of the economy, depending on the stats you use, and all these things are going to basically highlight what we've seen over the last while. Consumer is everything, 60+% of the economy. Okay, so without it, you're going to be in a serious calamity, if you want to call it that. Rising thefts at Walmart could lead to price jumps and store closures. How many times have you seen these videos passed around social media and maybe on the websites that you check where there's a guy walking into a store, he grabs as much as he can lift, carries it right out of the store. People are recording him with a video camera, but he knows he's not going to face any trouble from the people that work at the store. And he also knows that he's not going to be prosecuted. And so he walks right on out. We've had everything from spam to Colgate and toothpaste items that are locked up. You know that you are in big trouble in your city when these type of things happen. It is heartbreaking to say the least, where you've got places that, $1 million home down the street, and then you've got all these problems of theft, and I would say a lack of prosperity, because that's ultimately what it is. It's a serious lack of prosperity that's taking place right now as we see we are going through this cycle, the cycle of this economic cycle. I mean, people just need to understand it, and I hope to do an explanation of that right now today. I'm going to break it down for you. If you stick with me, I'll explain it to you in very easy terms in just a moment. I wanted to show you this though. Philadelphia gas station owner hires heavily armed guards to protect business. We are tired of this nonsense. Gas is now so much at a premium that we've got to have heavily armed guards. This is an extreme circumstance. Ad growth is expected to slow further in 2023. Now that could result in cheaper, the price that you pay to advertise, which is a good thing. If you're an entrepreneur, if you're a business owner and you want to advertise, it might be cheaper. So you could see that as a positive there. However, for companies that are dealing with this right now, less revenue coming through the door means the potential for more layoffs. Then we have Paramount Global CEO warned of lower fourth quarter advertising revenue. Fundamentally, we're seeing another round of major layoffs this week, and that'll only increase the odds that we'll have a hard landing in 2023 and enter a deeper recession than was initially expected. And they just go on and on, all these different quotes. But that's what was being experienced over the last little while. What is happening here? This is it. This is the chart you've got to know. If you only take one thing from this video, understand this. The comparison in between the stock market, which is represented by the blue line, which is essentially the stock market capitalization, total stock market cap, compared with the red line, which is the Federal Reserve balance sheet. And they're always going to fluctuate in general, but you can see the movements here. As you start to have quantitative tightening, the reduction of the balance sheet, and of course increasing interest rates, you're going to have a hard time dealing with a strong stock market. It can't really have that strength there without the easy monetary policies. Now I wanted to break this down for you right here. When interest rates rise, investors typically become concerned about the potential for a recession. This is because higher rates can lead to slower economic growth, which can cause job losses and reduce economic activity. Higher rates can also make it more difficult for businesses to borrow money, leading to reduced investment and fewer jobs. Higher rates can also lead to a decrease in consumer spending, as higher borrowing costs can make it difficult for consumers to borrow money for large purchases. This reduced spending can further reduce economic activity and lead to a recession. This is a self-fulfilling prophecy that is happening right now at this time. In the short term, the increased money supply could lead to inflation as more money is chasing the same amount of goods and services. In the long run, the higher interest rates could lead to a slowdown in the economy as businesses and consumers have to pay more to borrow money, reducing their ability to make purchases and investments. Ultimately, it is difficult to predict the long-term impact as the economy is constantly changing, but it is likely that the long-term impact of the Federal Reserve's actions will be felt for some time. We know this to be evident, and I believe for so many people, we are entering difficult times, so we must be aware. This is going to really highlight what I'll talk about in the next section, and that is China's reopening is a bigger driver for oil prices than a cap on Russian crude. This is according to Singapore's foreign minister. What China is doing must, I repeat, must be the focus of everybody today. That's what I want to highlight right here and now. So let's begin by taking a look at Saudi and China agreed to strengthen energy cooperation. I've been talking about this a while, how they've been doing this, and we have seen the fear, even this slight suggestion that the petrodollar might be in a critical standing. Petrodollar basically means that we would have the US dollar basically all the oil that Saudi produces priced in US dollars. That kind of gives them the monopoly. However, Saudi Arabia is cozying up to China and the other way around, and they actively want to join the BRICS group. And the BRICS group simultaneously has said we want to create our own reserve currency. They would be dealing together, not with the whole world, but dealing together in their reserve currency. That would mean, as far as I'm concerned, that they would not be dealing with the US dollar. They're doing this. Look, they are hosting the Chinese leader to come on over. Hey, buddy, come on over. Let's do it. He's going to be there from December 7th to 9th. Big deal right now. In fact, the Emperor of China has met with more than 25 world leaders since consolidating power at home. He's making it very clear. He's taking a stand. He's saying, I am building these new contracts. We're going to make this happen here, and we are going to expand. This is the next economic phase. It starts with the phase related to the monetary stimulus, as I talked about, 2020. And then we go with the consolidation of power. And then you understand that this is all part of a grand plan. You could see it happening right before our very eyes. Now, speaking of that, Tim Cook says Apple will use chips built in the US at Arizona factory. Positive news, great news, because we need this. We do need more building at home. You need to see it in Canada. You need to see it in the US, in Australia, in the UK, and everywhere else. We need to have these countries actually building at home, even if it's not the total percentage. More is better. Okay, and that connects in with this. In Phoenix, a Taiwanese chip giant builds a hedge against China. This is something that I wanted to highlight really quickly here because I wanted to know, you know this already, I'm sure you probably already heard, but think about it for a second. The concern that I have had is what if, just what if, China takes Taiwan? And this point here, you have TSMC, a Taiwanese company that basically, in retaliation, China says that Taiwanese company, you could not ship out products. You could not deal with anything to do with the United States. Now think about that for just a moment in what impact this would have right at this particular plant in Arizona and then extend it out, because they could, in fact, have a retaliatory effect on what the US has done to them now. I wanted to highlight this cycle because the cycle is so key, so important, okay? Let me get into this. When interest rates remain low for an extended period of time, it can lead to asset price inflation due to an abundance of cheap financing. This can create an unsustainable bubble in asset prices that can eventually lead to a bust. Historically, when interest rates have been too low for too long, it has caused asset price bubbles to develop, such as the housing bubble in the mid-2000s. Low interest rates in the early 2000s caused an influx of mortgage lending, leading to a rapid increase in housing prices. When interest rates eventually rose, the bubble burst and the housing prices fell, leading to the financial crisis of 2007-2008. John Maynard Keynes, a famous British economist, once said, quote, "The best way to destroy the capitalist system is to debauch the currency." This quote speaks of the danger of keeping interest rates too low for too long, as it can lead to currency devaluation and can be damaging to the economy. Everybody right now needs to wake up and needs to understand the cycle that we are going through. I'll explain it over and over again, but I hope that I made myself clear here. Watch out what China's doing. Watch how they're looking at Saudi Arabia. Watch the BRICS nations. And of course, watch the economic cycles, money printing, and everything to do with this aspect. I will cover each and all of that in every video I do, so you got to hit that subscribe button. Hit that subscribe button right now, and tomorrow you're going to see some incredible information from me. I'll see you then. Take care.